How are you now? Broadcasting from the studios of Sydney and Gadigal country, it's the Theory of Thing podcast, Season 8, Episode 8. Remember, if it's talked about enough, it's a thing. Looking back on a week in which the market fell, panic still sticking with the S&P 500, only 20% come show. How are you now? Yeah, we're on now. How are you now?
You're live now.
This is James Wheeler.
Take two.
Broadcasting for this. Hey, yeah, we're good. We're take two. Broadcasting from the studios of Sydney in Gadigal country. It's the Theory of Thing Investment podcast, Season 8, Episode, I don't know. Remember, if it's talked about enough, it's a thing. Doesn't matter how many times you've got to do it. Second take here, bit of a snafu with the recording button on this one. But hey, it's not my job. This show is brought to you by the Australian Mutual Funds Exchange. 3,000 mutual funds all around the world from one easy platform. Check it out. Great way to compare what it is you're doing. We're also coming at you live. So AMFEX, AMFEX.com. Go and check it out today. We're coming at you not live, but recorded over YouTube. Hello to all those people who watched last week and watching it this week. I think it's a much more fun way of getting into what we're doing, putting some charts and bits and pieces up as well. A reminder that all the advice contained in this, or anything contained in this podcast, is general in nature. With regards to the advice, speak to an investment manager about your needs. That's who I am, James Whelan, investment manager at VFS Group. Bit of news on that coming up. I am a white male, age 42, as you can see if you're watching this on video. But if you're listening on podcast, you need this to be described because this is the theatre of the world. I'm dressed like a communist who's just decided to take up golf. I've got a grey sweater, a blue polo shirt, and some blue jeans on. I am joined by Heath Moss of HLM Investments. Heath, how are you now? And what are you wearing?
Very well, thanks, mate. Just a plain blue collared polo with some shorts again, very casually on this wonderful Friday morning. I'm all discombobulated. Friday morning.
Always an afternoon in Adelaide, mate. Yeah,
yeah. It's Thursday here, really. So yeah,
1972.
Yeah, exactly. But the timing of the podcast couldn't be better, could it? Because we've got some breaking news. We need one of these flashing breaking news sort of signs on the podcast. We're getting a new governor. As expected, Phil Lowe will end his tenure on the 18th of September, and his deputy Michelle Bullock take over and start a new era. I mean, Lowe's been in the seat for 7 years, and she'll get at least 7. Let's see how we go. So that's
a global search to find someone just down the hall. Yeah,
exactly.
That's a talking point.
And for all of who are in the hand, waving, etc. The Labor Party did when 6 months ago when we're talking about the RBA and changes and that.
Yeah.
To bring someone in from the very same board, and it's probably the same culture, same mindset, etc. I mean, really doesn't change anything.
Doesn't really change. It doesn't change anything. She would have done the same thing that Phil did. Probably may have messaged it differently. Don't forget that one of the key issues that we've had with Phil has been that messaging, his ability to communicate what it is that he's doing. I think that there's been a bit of a struggle in that. Which I'd agree possibly has more to do with the three pigeons that are working in the Reserve Bank media team. I don't know who they are, but in whatever broom cabinet they're in, there's no shortage of microphones or cameras down at that place. But apparently, sometimes there is. And when he does speak,
shortage of asbestos either.
That's right. So yes, the white smoke has been released from the Martin Place. I could see it here, and they've announced the new Pope. Which is beautiful ceremony that they have down there.
But it was also announced during the week that there was some changes coming through for the RBA. So like the Fed now, they're probably only going to meet 8 times a year instead of the 11.
Yep.
I think for 4 or 5 of them, it's still the first Tuesday of the month, and the other ones are going to be around mid-month. And meetings are going to last for two days, like the Fed. And give them more time to discuss and decipher over these matters. So, but I mean, look, if you're the new governor coming in, look, I think it's a pretty cruisy job to be coming into. You're coming into, probably what is close to peak rates, if not already peak rates. They're probably going to be on hold for some time, and the next move is going to be a cut, and no one's going to hate you for cutting rates. So,
that's right. You'll be invited to people's parties.
Yeah, Phil Lowe and the crew did You got to remember in 2017 when he came in. Was it 2017 or 2016? Can't remember. The rates were at 1.5%, so he had little to work with. And I mean, I know he did cut them down to 0.75% before COVID, but once COVID hit, there was nowhere else they could go except for zero. So what they have done is normalize rates for us moving forward. So if we do have a recession or a black swan event moving forward again, they're currently around 4.1%. Maybe we can cut to 2% and keep things a little bit more normal.
That's why you need to have that normal number, in my view. As much as I got slammed for that from all sorts of people around the industry, of just saying it's easier to do things around 5 than it isn't. And the response that people had was just like, oh, but people won't be able to pay. People won't be able to pay. It's just like, yeah, because we kept them too low for too long to sprig everything up. We just had a bit of period of normality. And trust me, I'm feeling it right now in my mortgage. Zero doubt about that. If there is, the other kicker is that if there is a lagging recession, which I've got no reason to think that there isn't. So I'm still holding to that thesis that we could have a minor recession in Australia that we may already be in. If there is one, then you get to blame the last guy for that, and any easing that you get to take the credit for that. So it's pretty positive for Labor to look forward to. I'll tell you what, there's an issue with tax that we're going to have a talk about soon. The groundswell of people who are shocked and extraordinarily upset with the fact that they're not getting anything back in their tax this year. I thought that was just that anyway.
That's because of that offset
conversation. They've cut that middle thing. Yeah,
that was only ever a temporary measure. I think when they brought it in, I think
it's one of those. Yeah. It's one of those things of just like, well, it's temporary, but do you really want to be cutting it right now at a time in people's lives? Look, we'll get to that.
And still giving
probably in a later episode.
Still giving the higher tax brackets their cut still as well. So the optics of it don't look all that great. Yeah.
Oh, good.
Well, so far they're still coming through. So yeah, but yeah.
Oh,
so,
it's been a good. You'd know. Your return looks fine.
Yeah, I mean it's been a good week on markets though. I mean,
let's get to that. Yeah. Oh wait, I've got news. I've got news.
Okay, go for it.
I've got news. That I resigned from VFS yesterday, so I'm just going through my 4 weeks notice now. It's nothing to do with VFS. It's just time for me to grow and move on. I was looking at some bits and pieces. It is Bastille Day today, and I'm learning French. I was thinking the other day something happened. I've done a year of French, a jump rope. I smashed a personal best for 3 minutes speed, which is quite significant for me. Great time, kids, breakfast, out the door. Got to work early. I realised I'm not doing my best. I'm not at my best. I want to try and move into that sort of more of that zone of excellence that I am supposed to be sitting in at the moment. So that's sort of where I'm going. So look. I'll be working that out, and that's just a bit of my news and an announcement about sort of next steps. I'll talk about that later. But markets, sorry. So there you go.
Yeah, It's been congratulations to whatever happens next. I'm sure it'll be an exciting journey, but a bit scary as well. I mean, something major like this is always going to rack your nerves a little bit. So,
a little bit.
But all the best, mate. I know you'll do well. But anyway, markets here and abroad. I mean, they've just been fantastic. If you want to bring up the charts, we'll get going on some charts.
Which one you got here?
There we go. We got the S&P 500 there. You can just see the beautiful move upwards. I mean, we're over 4,500 now. The peak is back here around the 4,800 mark, so we're not far off. It's just more exuberance. The rally continues to gain breadth. I think in the last rally, 65% of stocks have joined in on that rally. So that is a much larger breadth than was around the mid 30s. Look, I mean, there's not much to say apart from it's all around, rates, expectations, and
the two inflationary numbers that we've had.
Yeah, CPI and PPI, especially CPI, came in very soft this week in the US. It's now around 3%, core around 4.8. And remember,
that was extraordinary.
Both peaked about above around 9 over in the US, so they've halved for now. And so there's talk that now that the Fed has done their job, And there's still, that talk of that Goldilocks scenario over in the US where, they have that soft landing, they don't go into recession. Macroeconomic data is starting to look a little bit better again. And markets are buoyed on the back of that. And don't forget, we've also got US Q2 earnings coming up. And on average, for the first 4 weeks of the earnings season, the markets are up 2%. So we're into a really bullish period in terms of where the S&P 500 is at anyway. That's about all I've got to add to that.
Yeah, that's right. Well, I mean, I did my sort of my presentation for clients and anyone else who's out there, just talking about the quarter that was and the quarter that will be, and that was actually on the Wednesday, so before that CPI number dropped. And I was talking about, I had two charts that were up, and I'm just going to pull them up here, that discussing that whilst going from 9% to 4% CPI has been fairly easy. The jump to get from 4 down to 2, and this is according to Bank of America, is actually going to be quite substantially more difficult. And I'm just going to show this up here. This is just the presentation that I've got, so you can see. So you can see here to get to 4. If you can zoom in, I can zoom in. Yeah, that's fine. Okay.
Yep.
So you can see here. Okay, to get to 4, what they're saying is that you need CPI to be below 0.2% month on month to have any chance of getting down to that 2% to that 2% level down here. Anything else that they have, and this is where you come off that base effect of year-on-year sort of stuff. You got to do the maths in your head, and you got to sort of look at it. It makes you a bit cross-eyed sometimes. So you need a couple of beers before you get into it. But if it's at this 2.5%, so let's just take the lightest one. If CPI stays there at 0% month on month, then it does get down to 2, but then because of the base effect, it then comes back up to 2.5%. So it sort of it skips. So it's got to actually really start turning backwards as the year-on-year comparisons deteriorate. However, I did say, and this is sort of an interesting way of just going, you called it, just going that inflation is definitely coming off. We know that. And the key one, this came from Carson Group. I'm just going to flick over here, is that shelter is 40% of CPI makeup. And that has really started to turn over. So this came from Carson Group. And just talking about where apartment list index peaked way back here, rent, owner's equivalent, 2 big ones in here, they started to tip over as well. There you go. That was sort of just where I went, what inflation is going to tip over. I mean, it was great that it came off, and here we are, off to the races in the market. It's one of those times when this is why you stay invested to an extent where you go, you know what, you just tweak that small amount of cash on the sidelines. You don't imagine if you were sitting in 40% cash now watching this thing and just going, well, I thought I was smart for a second and now I'm not invested in the market at all. This is why you need professionals doing these things for you. And look, that's what we got. So anyway, so we're off to the races. It's been great for the Aussie market. You want to give us a quick Aussie market wrap?
Yeah, sure. I'll flick the chart over. Where are we? Here we go. Aussie market. We actually had our best day yesterday in 6 months. And second best day in the last 12 months. It was up 1.6%. Now, basically, you can see, last week it was complete opposite to what we happened last week. A really severe downturn there, and then a rally here. Today we have popped up again. We're up about. Let me check my notes.
It's about 2%, I think, wasn't it? Off the nose.
I think we're higher than that now. We're up around 3.5% for the week so far. So we're
for the week. Okay.
Yeah.
I thought you meant today.
No. Sorry, no. Yeah, up about 3.5% for the week. Again, that's based on this US scenario, this Goldilocks soft landing scenario. Also, the US dollar, if I can bring that up, the Dixie, that is cratering. You can see that there is cratering. It did drop below the 100 level a little bit last night. I was watching Bloomberg last night, and it did dip below that 100 index level. So that's obviously on the basis of yields coming off. And if I want to bring up the 10-year yield, how good is it that we can bring these charts onto thing? You can see that rally there a few weeks ago where we popped the 10-year pop back above 4%. It is now back around the 3.8%. So it's dropped about 20 basis points, 30 basis points in a matter of a week. And that's
my long
expectations. Yeah.
Long bonds. The long bonds overweight that I've got is looking amazing right now.
Yeah,
and
but
I mean, being long stock is also looking even better. So it's trying to weigh up that sort of risk adjusted return that you're making, which is it's far better and safer to be sitting in the bond market right now just because of the volatility. Then but that's a whole
when
conversation.
Bonds have rates have potentially peaked, and you can invest in these bond ETFs, knowing that there could be asset value appreciation on the other side with rates coming down, and you're still probably getting 4 to 5% on those bonds, especially in the US. It's a fantastic buffer and staple for your portfolio. But I mean, the Australian, the ASX 200 chart isn't as bullish looking as the US. We've got a bit of work to do, and that's mainly because of China and softness in China. We've seen their export numbers, their trade balance yesterday was extremely soft, but that stimulus that keeps on getting talked about really hasn't come through. I did see some positive signs in some of the data this week. I saw air travel in China for the start of July was 105% of what it was in July 2019 pre-COVID. So maybe people are starting to get out there again a bit more. Also saw oil imports, their second largest ever number for imports ever. They're up 45% year on year and up 11% for the year overall. So maybe that is signs that the economy is just starting to tick over again, and that demand is starting to come back. But they do need some sort of stimulus.
Well, the policy changes for the property sector that they made late last year and backing it up again earlier this week too. So, and that was enough news that Bloomberg covered that and basically had that as news that was market moving for about 24 hours after that. So it was interesting that it was picked up so strongly, and actually did cause it caused our market to tick up as well. So this is all before the inflation data. It caused our market to tick up as well, and everyone sort of seemed, like it's this is China now turning around. We've seen the bottom, and now they're moving things in an upwards direction. That was the start of our rally.
Yeah, and you can see here, copper, which is obviously considered the bellwether for industrial growth, global growth, has started to rally again, and we've seen a couple of big moves there. I dare say that's on the back of that stimulus and more economic positivity around China, and part of the reason why the ASX 200 bounced this week because metals prices bounced. The US dollar was down severely, so that helps commodity prices and metals prices. So things are looking a little bit better that way. But I mean, the data will still for China come in a little bit soft for the next couple of months, I think, before things really start kicking in. Their M2 and new loans data that came out this week was a big beat. So the credit is flowing. It's just got to reach the right places, obviously.
Yeah, I just got to get this copper chart onto somewhere that doesn't have a buttload of client data on it.
We've got the one up on the screen now. That's copper.
Yeah, that's a copper chart. I've got just some stuff that came out of Codelco.
Oh, okay.
There you go. I'm just going to... Okay, here we go. Let's see how quickly I can do that. Okay, so we've got a Codelco chart. So I hit that. Yeah, don't show this again. Okay, so what we've got here is a Codelco chart that I've just put up here. Chilean, you got that there? Cool.
Yeah, it's coming through now. Yeah, there we go.
Yeah, Chilean state miner Codelco posted its lowest copper production in around a quarter of a century last year. Wow. Copper production in 2023 is set to be at the lower end of Codelco's 1.37 to 1.42 million metric ton forecast, and the stat that was with that is... well, hang on. Yeah. No, this is going to work. Hang on. Yeah, we're good. So it's not showing stuff on there. Okay, that's great. It's 14% decline year on year for Codelco, and the BHP majority-owned Escondida mine is down 21.5%. It's funny the way that sometimes things just sort of swing around and you just go, oh, we actually do have a significant copper shortage, and everyone just suddenly forgets for a while. Copper trickles away, and then it suddenly comes back into it. It's just like, oh yeah, we've got that shortage. Remember that shortage?
Yeah.
And copper just starts to rally again. A long-term hold copper miners for me, and I've got a decent overweight position directly in BHP too. So pretty happy there.
Yep. Yeah, and I'm using the Global X ETF Wire quite a bit.
That's how I'm doing it.
Yeah,
that is.
Yeah. exposure to global copper producers. Excuse me.
Yep. No, that's that has gone quite well as well. So that's it wasn't showing quite good. It wasn't showing very well recently, and but now it seems to have really shone. I saw it. You just look the way that it turns, like a bus trying to turn around, and all of a sudden it does get on the way and off it goes, which is great. What else we got here? What else do we say we're going to talk about?
What else? So we got Australia, China.
Yeah, Q2 earnings.
Yeah, that's it.
US dollar,
What
China.
US earnings? US earnings. I think we've got to discuss that a little bit.
JP Morgan
because,
tonight.
we've got JP Morgan, BlackRock, Wells Fargo tonight. We had Pepsi and Delta Airlines kick it off last night. Both were big beats. The commentary from Delta they were seeing robust demand in air travel from consumers. And Pepsi, their beat was basically came down to prices rising still. Their volumes were down on both beverages and food, and so the beat came down to price rises and consumers still being happy to pay those price rises. I think volumes were down like 1% and 3% for beverages and food, so not anything material. But I like watching these staples like Pepsi, McDonald's, Coke, all those sorts of staples where, if you start to see some severe downturn in their earnings and their businesses, you're in trouble, because these are the last things that people start cutting from their household budgets, especially in America, one of the most obese nations in the world, from their budgets. And so, people are in trouble if they start cutting there. So I really like listening to their commentary and that. And apart from, the volume side of things down slightly, it was still quite positive. But overall, I was looking at some FactSet data this morning. They're expecting Q2 earnings to be down 7% year on year. Which
7.
would be,
wow, okay.
Yep. But they did have analysts forecasting the Q1 earnings to be down 6% year on year, and they only came in at 2.5%. So they're a little bit too pessimistic. So maybe the same will about happen here, but down 7%, which would be the worst quarter since the COVID stuff went down.
Well,
so yeah.
Carrying on with the fact set of looking at the negative and positive ES pre-announcements. I'm just going to do this again and throw this up on the screen. What am I doing here? Hang on. No, screw it. I'm just going to. Could be bothered. Hang on. No, I will do this. Here we go. I've got a fact set numbers here, which is, I need to be quicker at doing these things. It should just be a button. Why can't you just do a button? There you go. S&P 500 negative and positive EPS pre-announcements. So this is the guidance going into it, that 46 companies have issued positive EPS guidance for the second quarter 2023, which is the highest number since the third quarter 2021. So a couple of years ago at 56. You can see the green numbers here. Potentially ticking back up, you're going to get more positive earnings numbers out of companies, and a bit of a detraction in negative guidance as well. So the red columns there too.
Yep.
That's my involvement in that regard. Look,
well,
it seems like
they do expect Q4 to be reasonably strong in terms of earnings. Analysts' expectations around 8% growth in earnings in Q4.
You keep talking. I'm just going to get. That's Gregory, our producer. So you just keep on going there. You're doing a great job, mate. Stick at it.
That's great. So yeah, I mean, and when you're looking at these upgrades, these earnings upgrades, and talking about where they're coming from, out of those 46, I believe around 30 out of the 46 are coming from tech and industrials. Those are the two areas where you're seeing most of the earnings upgrades. And look, there's the man, Greg, passing through in the background.
It's Gregory. Wish him a happy Bastille Day to Gregory.
Happy Bastille Day, mate. Beautiful. It's really tech and industrials driving those earnings upgrades at this point of time.
Yep. Yeah, I'm happy there. I also sort of starting to switch around because I've been a big Staples fan over the discretionary stuff, and now I'm starting to think, okay, you know what? If we're seeing easing, maybe it's back to buy everything. Sort of, oh my god, it is a buy everything scenario.
really want to be buying everything
feel
at
like
19 times forward earnings?
a little, like the little skylight opens and you
Epiphany.
just get that beam of light,
Yep.
suddenly it hits you in the face and just going, this is a buy everything opportunity. Buying bonds, long equities. I mean, hell, even gold and copper and commodities.
Look, I'm very much,
and the Aussie dollar.
Yep. I'm very much on the
So
energy side of things again now. I've been dipping my toe there with Woodside and Santos. Actually, probably more Santos because I think they've got more exposure to spot price. And gold, I haven't dipped my toe yet, but it's looking likely if the US dollar and yields keep behaving like they are, gold should rise above that 2K mark again and keep on going.
I'm not faffing around in gold. I always get it wrong.
I mean, I like it as a trade, but I'm never in there for the long term. It just, like you, it does. It's my one weakness, I think, in my investing portfolio. So but you're right. US dollar keeps coming off. China stimulates. US doesn't go into a recession, then commodities are going to do very, very well. So yeah.
Okay, mate. I think that we're almost wrapping it up now. Gregory's here, and that is it. I'm going to probably catch a beer. Go and find a 1664 for Bastille Day. What's a good French beer? Yeah. Anyway. Where are we at now? Footy. Go. Now I got a win last week. Absolute.
I got a loss.
Belter of a game between the. So I'm starting to see it's all turned around. I'm the one who's carrying this ship now. Yeah. Okay.
Okay.
It's me carrying the burden. I was steering the ship, carrying the burden.
I put the money on the Saints just to win. I can't remember who they were playing, but they were outsiders. And then in the first quarter, their best forward and one of their best midfielders were out for the game. So I was done. I was done almost before the game started. But this week I've got. What was my tip? My tip was different last night. My tip was just purely Carlton to beat Port Adelaide last night. They were just outsiders, just over $2. $2 for them to win. And they've come in since teams came in because Port have got a lot of injuries and a lot of changes. So I'm saying
are you taking on Port Adelaide?
Yeah, Carlton to beat Port at the MCG 1-39, which is around $2.35 at the moment. So I did have just Carlton to win.
But ground last week.
Yeah.
Okay, so Carlton with a few points chucked in. Okay,
1-39.
Carlton with a few points. Okay. Oh, so to win in
margin.
I've never understood that capping that margin thing. Anyway, they kick one more point and the whole day is ruined. But anyway, mate, I really don't have anything to put in here. I'm just going to say, I'll tell you what, take the easy runs. What's a special here? You know what? I'm going to say, take the Warriors over the Sharks. I like the Warriors. I like what they're doing. I think it's a 50-50 game. And I'm going to take the Warriors, and I'm going to tell you what they're paying, even though I've just looked at that. So this is no research, so do not put a whole lot of investment in this if you are following my tips. Although I've been right many times in many weeks. I've got I know. Hey, this is what happens when you're investing, and you just I don't need to do that research. I'm fine. Everything's okay. And that's when you get caught out. So beware. Now, New Zealand Warriors, it's about $1.96, about even money that you can get on that one. I think they're strong. And we'll see how we go. But so not a lot of research done on that. I've been too busy trying to rearrange my entire life and getting myself back into my zone of excellence, which is what I need to be working on. That's it for the show, unless you want to throw something at us.
No, I'm done.
Okay. No more bids. Don't forget, Beltree are having this amazing charity event up at the end of October up at Colburn. A good friend of mine running it, hosting it, putting something on. If you want to check it out, BELTREE is the name of the thing. They've got this huge glamping thing. You should go up there anyway and just try the glamping thing, which I think is open now, but will be open and proper soon. But as sort of their opening launch, they're having this big breast cancer charity night. I'm pretty sure that it's against breast cancer. They're trying to raise money, not for it, if you understand where I'm coming from there. But it's important to have that delineation. But yes, so huge breast cancer fundraiser that they're doing up there. Couple of seats still available. I've booked a table with my accountant, and it's always good getting some money out of your accountant. Sometimes feels good, doesn't it?
It is. It's tough, isn't it?
So I know. So we're going to go out there and do a bit of schmoozing and a bit of drinking. Put our body weight in Hunter Valley wine is probably going to be the way to go at the field of the
Beautiful.
day. And that's about the box and dice. It's the Beltree. Check it out. Great event, end of October. And this podcast is sponsored by AMFEX, AMFEX. Go and check out the website. Anything to do with managed funds around the world, mutual funds around the world, especially into India, which is where it's really hot. Again, I keep on threatening to do an Indian podcast. I am going to do one very soon. That's what we've got. Look, Heath Moss, HLM Investment, thank you very much for joining us.
Thanks for having me, mate. It's been great.
Have a great Bastille Day in your shorts over in Adelaide. Big French contingent over in Adelaide, is there? For what happens?
I don't think so. No.
Okay. Well, Gregory and I are going to edit this thing and then go and find some patisseries at the boulangerie. Thanks very much for joining us, everyone, and I'll see you all next week.
Have a good one, everyone. Bye.